walk us through why you believe a freight recession is imminent? And does that mean, as far as indicators go, that the U.S. consumer is in trouble?
Well, we saw a significant deterioration in freight volumes in March, and it continued through April. We actually saw a little bit of bottoming in the last week of April, but then the markets continued to proceed down. So we don't know if that was just after post Easter sort of flatlining or end of month, but we certainly have seen the market continuing to deteriorate from where it was really in the earlier part of the year. So what concerned us was, if you look at March is usually one of the best times for trucking. It's the start of the summer freight market. It's the start of the produce season. It did not operate the way it normally does. We saw a deterioration in volumes, and volumes are down about 18% since January. So it's something that's quite concerning to us. It's something that we're keeping an eye on.
Would you say, Craig, then, that this is consistent with the negative GDP print for the first quarter? And if this is consistent with a broader recession, then how elongated and how deep could it be? Are you getting any guidance from the data?
Well, we certainly believe that the consumer, a lot of the softness is related to retail. Inventory levels are at record highs. If you take automotive out of the inventory numbers, you actually see record high levels of inventory. A lot of that is retail goods that's out of stock or out of season that retailers are stuck with in terms of inventory. So certainly what we've seen in recent weeks with a lot of the earnings reports that are related to consumer, starting with Amazon, Shopify, eBay, all of those have come out and talked about how e-commerce has declined. We saw it in UPS's earnings report that residential was down in the quarter. And we think that is just the start of it. So we think consumers have pulled back. Consumers have been stretched. They're not buying physical goods. So when we look at a lot of the data, what we see is consumers are still spending money, but they're spending money on services and not on physical goods. And that's where we see a lot of the earnings reports are starting to make sense, because the companies that are most exposed to a deterioration in spending and a deterioration in volume happen to be in those plays that did exceptionally well in the front end of COVID, and that's largely out. Freight companies are volume dependent, which means they're more concerned about moving volume of goods through the economy than they are about total dollars spent. So as consumers have seen an erosion of purchasing power due to inflation, it means they're not purchasing as many goods, and the money that they're spending isn't going into physical goods, but rather services, and that really hurts the freight market.